That's exactly why I'm staying out to acquire long position. 99.9% of the time, trader who doesn't know the trader is at the danger zone levels, entering long, that's what happens. Price was incredibly clear. I patiently monitored, waited, knowing well that if I will take long at any point, I will get smashed. What happens with a retail trader who doesn't understand the importance of stops? Stops are market orders. If you have stopped 1 point but sellers step in with vengeance, you could get stopped out at 10, 15 and 20 points. That's exactly why I named this trend exhaustion level danger zone. You're acquiring position here, never, ever, ever here. It's a losing proposition. Greed and ego does not work. Rules do. At any point, I may be taking short. So finally, oil news is out. We don't have enough oil. Trading news. Professional trader source spelling this out. 380K versus 1 million. We knew that days ago because we're monitoring danger zone level, correct? As we know, danger zone level is short trend exhaustion level. I had taken trade on 13 range. I spelled out, this is major resistance area. If my price will blast through this level, the trend will go on forever. The show had just begun. But I know better. Profits of the table taken here stop at break even. Day trading is not meant to be abstract, it's meant to be specific. All you need is simplicity, patience and discipline, and the sky's the limit. Why in the world am I staying out of S&P? Because I know better. Danger zone had been reached. Know when to stay out, as we discussed at the market open. Because if you're acquiring trend position anywhere here, you're playing Vegas. Might as well do so and enjoy the massage and the show, not trading. Trading rules and discipline is everything. If you're getting tempted and you're acquiring trend position here, ouch. So will oil break through? Oil is struggling. We knew that. I spelled out, monitor. Know where to take profits off the table, because when sellers will step in, the selling will be vicious. So will oil succeed and will rally pick up the steam and fly on forever? Awesome, Jeff. Thrilled to hear that. Go oil. We know you can do it. We have faith in you. You had an identity crisis. You became S&P and S&P became oil. We know you can do better. That's why we love you so much, because you are full of surprises. Go oil, go oil. You are not S&P. Make up its mind. It's unheard of for me to have 6 trades on S&P and 2 trades on oil. What? The end of the world is near. You can do it. That's why we love you. Please don't be confused. How much fun can the trading be? All you have to do is play by the rules. If you know where danger zone levels are, you know where not to acquire trend position, you know where to monitor for reversals. Price knew this days ago, as price had been doing this phenomenal dance 3 days in a row. And finally, not enough oil? Showtime. Buy, buy, buy. All oil has to do is blast through the sellers. So heads up. As oil taking its sweet, sweet time struggling through, don't worry, sellers will step in. I will trail very, very carefully. But if we'll blast through the danger zone levels on 13 range, price migrates into larger time frames. Oh no, the danger zone is here. What will oil do? I'm adjusting my trail. If price blasting through danger zone, it's migrating into a larger time frame. You remember, correct? And you saw what has happened on danger zone on 1 hour, my guiding light, correct? Price reversed. Will I get a selling pressure here? Do you remember what has happened on Apple? Apple still dancing at danger zone levels. And the fluff on S&P is on. It's on as expected. Anybody knows what this means. Indecision. Know when to stay out. Very dangerous dance. Blast on oil continues. So if oil blasts through danger zone, the rally had just begun. But it's a problem. Formula remains the same. It doesn't matter if it's oil 13 or if it's oil 1 hour. It is all the same. You're learning that it's incredibly important to know where your trade exhaustion levels are, what not to enter into, where to take profits off the table. I'm giving it a little bit of a breathing room, but here we are, 30 ticks later. I am expecting a pullback. If my price will migrate through the danger zone level, I will go into large time expansion. But this remains a major obstacle. This is the same formula. This is where oil reversed from. So will oil 13 range be able to break through? Or will our trade end here? That remains to be seen. Danger! Oil is getting ready to push back. Ouch! Oil is sitting very, very pretty. As expected, formula remains the same. Price is struggling immensely. So we've been babysitting this oil pause because danger zone had been reached for the last 15 minutes. And it may go on and on and on. So let's review all the other levels. S&P daily, 1800 broken, 1813.75 is next. If you're an options trader, there is still hope for you to make it to the third target. Pay attention what happened with the price when decision point 1 was reached. 3-day pause. Price spelled out very, very clearly that this is not the end of the trend, that price will head further. Pay attention to what happened when decision point 2 was reached. Second target. Know when to take profits off the table. Spelled out weeks and months ago. 1800 critical. Next level 1813.75. Simple. Oil. Monthly spectacular collapse setting up from decision point 2 drawn 2 years ago is still on. Why is oil finding this rebound? Because danger zone on monthly had been reached. Because danger zone on hourly had been reached. Formula remains the same. Doesn't matter if it's range chart, hourly or daily, whatever it is. Next. S&P monthly showing us next level 1839. 1839. Pay attention to what price had done when decision point 1 was reached. Again, price structure drastically different on monthly, weekly, daily. Trade what you see. Pay attention to these levels. If you're trading monthly, next level 1839. 1839 is broken. Next one 1900, 2000 and 21, 39.50. Bigger the time frame, bigger the wave structure, bigger the targets, bigger the stops. Oil continues on. Actually, S&P weekly is stalling at the end of the minor trend. Oh no! Oil is giving us selling pressure. As expected, as we knew. I'm gonna adjust my trail a little closer, 94.10, because I know better. If sellers will step in oil, it's gonna be vicious. So pretty please, protect your profits. This is completely expected, just like this reversal was expected. Is everybody clear how expected it was and how we knew that price will reverse at this level and how carefully I trailed? We're out of this trade. At any moment, I may be taken short on oil. Day trading is essential to be precise, essential to be specific. It was incredibly clear and completely expected when our long reached this level for the price to struggle. That's why I trade very carefully. That's why I spelled out this is second target. Know where to take profits off the table. All you need, pure price for entry and Fibonacci for exits. No need to make it complicated. Simplicity, patience, and discipline is the key. No fluffy, no delayed indicators, none. Just you, your knowledge, confidence, and no babysitting the fluff, which is exactly what we're witnessing on S&P, as expected for the last 2 hours. Danger zone had been reached. Formula remains the same. Our trade collapsed when it reached this level, and S&P long trend is exhausted. Nothing good is happening. Sellers not stepping in yet. I do expect for sellers to finally win at any moment. So this is how magical this puzzle called price is. As we expected and we discussed, we knew it would be absolutely brutal and choppy and fluffy day on S&P. And here is the danger zone dance in a full bloom. And oh no, trading news announced. Choppy trading ahead of FOMC minutes. That's where knowledge and power and confidence kick in. That's when knowledgeable trader doesn't babysit the fluff. Will be an awesome trading after FOMC release. Last time 3 trades within 15 minutes. Knowledge is power. Being a follower does not work. So at least we know better what danger zone dance means. This price is telling us right now, correction is on. Danger zone dance is on. We are staying out because nothing good happens if you are entering trade at these levels. That's exactly why I named danger zone level. Trend exhaustion level. 2 things happen when price comes to this level. Either opposite trend correction or opposite trend reversal. I've seen nothing but corrections. There is no trade here. Nada. Zero. Zilch. So far this morning we had 2 trades on oil. First trade reached first target, second trade blasted to the danger zone. And we got out of S&P at break even. There is nothing else, it's here. So far this week, 9 trades between S&P and oil, 6 on S&P, 3 on oil. Only 1 negative trade on S&P. Since both S&P and oil stuck in correction, let's look on euro. Reminder how critical and how important decision point 1 is. S&P had struggled against this level and collapsed. At this level signifies the end of the minor trend. Here it is, visited on November 13th, collapse. November 14th, collapse. November 16th, pullback. And finally, price had made it to decision point 2, dancing between the levels. So where is euro now? Oh no, exact same formula as you saw in our trade. Price collapsed after finally reaching danger zone levels. Know where these levels are, know where to take profits off the table. Remember what not to enter into. Precision is a key. Simplicity and price works. And all these levels you know far in advance. All the levels drawn on euro on November 10th. Far in advance, you know these levels. If you know how to trade Alpha Wave Trader method.